Colorado, Mr. Tipton.
Thank you, Mr. Chairman. Thank you for your leadership on the Choice Act and our panel for taking the time to be able to be here. Mr. Purcell, I thought it was interesting as you were talking because you were describing in Texas what we see in my rural district in Colorado. Oftentimes those mobile homes are the homes that people have access to. But just looking at the impact on a community, the rules and regulations that we're seeing under Dodd-Frank, I assume in your bank, I served on a small community bank as well. We had plumbers, electricians, home builders, all impacted with those mortgage loans that were being made. And you have a collateral, a domino effect that actually moves in. Is there concern, because we've had, I think, abundant testimony, frankly, from Chair Yellen, Mr. Trillo, all of the administration officials in terms of the trickle-down effect of rules and regulations. Right now, we're still waiting for 40% of Dodd-Frank to be able to come into play. How's this going to have a real impact on those community banks, their ability to be able to make those loans to the communities that, frankly, right now, and be able to buttress a little bit of Mr. Pittenger's comments of the impacts of an economy that is not working for all Americans. For the first time since we've been keeping statistics, we have more small businesses shutting down than there are new business startups. That typically describes rural America.
And the shoe hasn't dropped yet because I believe the CFPB is going to start investigating how they can help on the small business lending and start passing out fines on that too. So, you know, if it costs you $125 or $130 a loan to make in compliance cost, what do you have to charge a $500 borrower to get your money back? You're going to lose money on it. How many businesses can keep going when they lose money? They can't. So the size of the loan keeps growing up to cover those costs, and then you have the CFPB coming in saying, let's go ahead and attack the small business. It has nothing to do with the economy. It's just that you guys don't know how to loan money, or better yet, let the post office do it.
Great. Mr. Allison, would you maybe like to comment a little bit in terms of the impact of those regulations in terms of startups and small businesses?
I think they've been dramatic. As I said earlier, I started my career as a small business lender. That's what BB&T did. That was our core business. We did a lot of what's I'd call venture capital lending, where you make a judgment of the individual and the ID instead of just the numbers. I was fortunate enough to help a lot of small businesses become bigger business. And it's not just startup. There's a moment where a business says, I'm going to have 2 locations or I'm going to have 100. And at that moment, you have to make a judgment call. You cannot do that in today's marketplace. The way the regulators have tightened lending standards that immediately make you charge that loan off, that require so much down payment that the guy couldn't do it. They've killed that market. And that market, even though only a small percentage of them get to be big men, that's a huge job creator and really important in terms of prosperity.
You know, I find it interesting. We've had a lot of commentary, a lot of testimony. Your comments here today on the importance of our community banks, our small credit unions, delivering a service to communities. But Mr. Purcell points out in Texas, they lost 149 community banks. I assume mergers that probably took place. Is Dodd-Frank actually driving a self-fulfilling prophecy, and rather than eliminating too big to fail, actually driving it into a more consolidated market, which is going to create far more challenges, far more risk for the economy as we move forward? Mr. Allison?
No question. It's encouraging consolidation. And I will have to say this, I'm not sure the Fed doesn't like that, because the Federal Reserve would much rather regulate a relatively small number of banks, which they can have a huge control over, than a lot of banks running in different directions. So it may not be a conscious policy, but I'm almost positive it's an unconscious policy. They like the consolidation process because it gives them more control, and that's what they think is good.
I appreciate that. Mr. Chairman, I think as we listen to this testimony, I'm hearing stories about communities. I'm hearing Home Depot would not start up under the regulatory environment today. I'm hearing from credit unions that are saying that they're struggling to be able to provide a service to rural communities. And I want to applaud your leadership in regards to the Choice Act to try and be able to open those markets back up to our local communities, to be able to make those real decisions at the local level, to be able to make something, Mr. Allison, you spoke to in terms of a character loan, people who actually know their customers, to be able to open that economy, that real capital so that we can get this economy moving and let all Americans share in some future prosperity. Yield back.
Time of the gentleman has expired. The chair now recognizes the gentle lady.